right, this is just coming at us. There are sources who suggest that General Motors has reached a tentative deal with United Auto Workers Union. Right now, General Motors stock is up more than 1%, just over 1.8% actually. It's at 1.25%, sorry. It's at $27 a share. Same with Stellantis and Ford. They are up slightly today. Now, check out futures, please. That rally is holding. Dow up 200, NASDAQ up a 92. Solid gain for the S&P as well. Show me the 10-year Treasury, please. That's the all-important number these days. It's going up. The yield's going up this morning. 490 is where we are now. But the rally in stocks holds. Keith Fitz with me this morning. All right, Keith, are you still putting any spare cash into 5% Treasuries?
I am, Stuart, and good morning, but I'm also beginning to think about deploying it, particularly with Apple coming up and some of the other big earnings ahead. We've got a lot of good numbers coming up on the board, and that's taking people by surprise.
Well, why invest in stocks as the war? I mean, look, it's intensifying, it's extending to some degree. Why put money in stocks at a time like this?
That's a really interesting question, and it dates back to the old adage, you buy low, sell high, or famously attributed to Lord Rothschild, you buy on the sound of cannon, sell on trumpets, which is 1805, 1810 or so, Battle of Waterloo. But it's an ode to stepping in when everybody else is running the other direction. History shows that after conflict, there are tremendous periods of economic expansion, and if you can, you want to stay in the game, you want to invest, particularly if you're a dividend investor and you're disciplined about it.
What about the Federal Reserve? They meet on Wednesday. We'll get an interest rate decision. Honestly, I can't see them raising rates with a war going on in the Mideast, can you?
Well, actually, respectfully, I'll take the other side of the table on that one, Stuart. I think they're going to be silly enough to raise rates just to prove a point because they can't admit they're wrong, and they've been wrong since they said transitory. So I think we've got one more rate hike into the end of the year, one more in Q1, Q4 before this turns over.
If they announced a rate hike on Wednesday of this week, all bets are off on the market, aren't they?
It's easy to think that way, but I actually think there's going to be a counterintuitive input. I think that if the war can stay relatively contained, if the meeting, for example, between the Saudi Arabian defense minister and our ministry, if there's some sort of détente, there's some sort of understanding that's reached, and the markets get comfortable with that, I think it can handle a rate hike because everybody knows that that's Powell's game plan. It's the uncertainty that's really the gotcha.
What are you expecting from Apple?
Oh, I'm expecting about 7 to 10% earnings growth, but really what I'm watching is Apple Card, Vision Pro, and their intro into gaming, because I think between finance and entertainment, you've got billions of devices. I think it's going to be good numbers, and if it goes low enough, I hope I'm smart enough to buy more.
Okay, gotcha. Keith Fitz, thanks for joining us, sir. Always appreciated. 19, 18, 17 seconds to go before...
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.